We're going to do a brief video on MSFT stock. That's Microsoft stock. We've got a daily chart here for you with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. Microsoft today is down $13 or 5% and currently trading at $237.41, 43 million shares versus an average daily volume of 25 million shares, and it's about 11:30. Let's take a quick look at this. There's some interesting charts. I'm going to show you an hourly, a daily, and a weekly, and then I'll show you our algorithmically generated entry prices. We can see Microsoft's in a bear market. It's been a bear market for quite a while, all the way back here since April of 22. Bounced off the 200-day or underneath the 200-day moving average August 16th time frame, and then down, put in a bottom here on the 13th of October, along with a lot of other stocks at $219. So what's going on? Well, basically the stock rallied, and it put in a good rally. It got above the 20-day moving average, the 5-day moving average, and it just barely scooped up top of these recent highs. But I'm not going to say it went far too fast, because it really doesn't look that way to me, but something's going on with the stock, probably fundamentally. For Microsoft to gap like this, that's a huge gap. We're looking at $246 versus $237. It's a $9 gap in a major stock. So a little bit interesting there. Maybe there's some fundamental information out. I don't follow it, but from a technical perspective, this stock wasn't really overbought, and now it's definitely, in my opinion, oversold. So unless there's something hugely negative about Microsoft, we're in oversold territory here. Keep in mind, however, we're still in a bear market. So when you're in a bear market, any bad news is going to crush you. And it may be, again, some bad news came out here. But it's interesting to note that every time this stock has rallied in this bear market, every single time, we've had a gap on a sell-off from the peak. You notice here, here, and now here. So that's an indication to me that people are trying to dump this stock the minute they can get their money back out of it. You can see a lot of money probably got in this stock in the 280 range, a lot of money. And a lot of them have been holding on, and when it rallied back up to the 293, they sold out. And then now the stock came down, made new lows, and you see as soon as they get up off those lows, they're dumping it. And that's probably what all this is a technical move. Excuse me. Let's take a look at the weekly chart, and I'll show you. This weekly chart is a weekly chart of Microsoft. This blue is a 200-week moving average. You can see that we've been above that 200-week moving average all the way since March of 2013. So that's, almost 10 years. So what's going on? You can see the previous corrections haven't gotten anywhere near close to it. Here, this slight little correction here, but now we're right on it. So a few weeks ago, the week of October 17th, and actually it's probably the week just before that, the week of October 10th, we put in a bottom at this 219 level. So this stock is right up against the 200-week moving average. If it violates that moving average, it's going to sell off like crazy, and it's probably going to go down to the 180s. So, and it's going to do it pretty quickly. So that's, I think, a major concern of people here. They're trying to get out of the stock before it tests this 215 level, which is where we're looking at today for the 200-day moving average. So from a technical perspective, on a weekly chart, it's below the 20-week moving average and really flirting with a 5-week moving average. It's still above the 200-week moving average. But if it gets below this 200-week moving average, this stock is really going to put some negativity in play. And again, I think it'll push it to the 180s. I'm not predicting that. I'm just describing what would happen if that stock breaks. This is an interesting little hourly chart for this stock. This is a 200-hour blue line here, moving average. You can see it got above it and just crashed. The first time it's been above it since August 26th. It makes a pretty strong run from about 239 to 250 and just breaks straight down below the really a huge gap below that. If you can calculate it, that gap's almost 17 bucks, and it broke straight down on that, and has since rallied a little bit. This is a hugely negative hourly chart for a stock like Microsoft. So my short-term analysis of this stock is it's in a deep bear market. They're selling rallies like crazy and in a panic, which means somebody thinks the stock's going even lower. I'm not predicting that, but I'm just saying this stock was a hair overbought, and now it's a hair oversold, assuming nothing crazy is going on. But if this continues like this, as it continued here, you'll notice we had multiple gaps. As it continued here, multiple tiny gaps, then this stock's going to probably violate that 200-week moving average and move down into the high 180s at a minimum. I'm not predicting that this second, but that looks like what this chart's showing me. Let's go down and take a look and see what algorithmically generated entry prices. RBM Research puts them out every morning before 7 a.m. and they're out today for the 26th. Let's see what it says for Microsoft. 1, 5, and 20-day hold periods. You put out zeros here today, so got that one straight. Said not to buy this stock and turned out to be right. Let's go down here and take a look at the trend following system for Microsoft, called flat, and no entry price on that. So I'm not sure if that's good or bad. Some of these were shorts. That would have been a good trade, but it said flat, and that's what it says. You can get access to all of these every morning before 7 a.m. Absolutely no cost, no credit card required at rbamresearch.com. You just follow the link in the description below. Go over to RBAM Research, put in your email, and get instant access to 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts, all algorithmically generated entry prices every morning before 7 a.m. Keep in mind, everything you've seen and heard on here is for entertainment purposes only. Can't use it for anything other than entertainment. That includes my commentary and our entry prices. You should always do your own analysis, and you definitely trade at your own risk. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a good comment for us, we'd love to hear it in the comment section below.